welcome to our channel where we help your real estate investments work harder for you. I'm Samantha from Elevate Realty in Toronto. In this video, let's talk about leverage. But instead of just explaining what it is, I'm going to focus on when I think leverage is a good idea for investment properties and when it might be too risky. Now, if you're not familiar with this concept, leverage happens when you use borrowed money to boost the financial performance of something. So what this means is if the market moves in the right direction, then your returns can look a lot better. But the same thing goes for losses. If the market moves in the wrong way, then you also magnify your losses. So leverage can be dangerous if you don't use it properly. Here's an example. Let's assume you make stable 10% returns from a proven business. If you have $100 without leverage, you make $10. But if you can borrow another $100 at 2%, then you can make double the amount and use some of that extra money to pay the bank back $2 in interest. So here, leverage amplifies your returns from $10 to $18. But what if your returns aren't stable and you end up losing 10% instead? If you put in only your own cash at $100, then you only lose $10. But if you borrow an extra $100, leveraging here makes you lose $20, plus you lose another $2 in interest to your lender. So as you can see, leveraging investments with unpredictable returns can be pretty risky. Now, I haven't talked about my past jobs before, but one of them was in corporate and investment banking, and that role really clarified the two sides of leveraging for me. On one side, I saw corporates make good use of debt to increase their business income. On the other side, I saw speculative investors try to boost their returns using financial derivatives. So what happened here was they bet on the swings in the market, which was risky already. Then they leveraged their positions, which amplified that risk. So when the markets moved in the wrong direction, this ultimately ruined a big handful of large corporates during the financial crisis. So after that, I went on to start my own business. So here's another real life example. I didn't use leverage to open multiple locations on day one since there was no proof of concept. It would be way too risky. But once I tested one location out and created a good model to follow, then it made sense to use leverage to grow a reliable business to multiple locations. Now, this exact reasoning applies to leveraging investment properties. The rental portion of your investment property is a business with stable income. So if you use leverage to boost your rental income, it can be a good idea. There's a few more things to it. So here are 3 things that I like to check before I buy an investment property. Number 1 is that your rental income should be more than how much you pay out for on a monthly basis, including operating expenses and your mortgage. Now, we know that real estate goes up in the long run, but you need to make sure that you can hang on to your property if the market dips. The reason I'm stressing this is that there are speculative investors out there who are okay with no or even negative cash flows because they are betting on appreciation. But the reality is that appreciation is not guaranteed, so if something unpredictable happens like COVID, some of these speculative investors might lose their holding power, which may lead to them having to sell at a loss. Number 2 is that you need a loan that won't be recalled or require top-ups if there are small market movements. So if you're getting a traditional mortgage with a bank, the contract usually says that your bank will lend you a set amount for a fixed period of time as long as you make your monthly payments. So this is pretty safe. Now, this isn't the case with all loans, and an example of a riskier way to borrow money is with a margin account, and this usually happens with stocks. When you trade on margin and prices swing the wrong way, you'll either need to top up with more cash or take a loss. So in this type of loan scenario, it is a lot more risky, and again, it reduces your holding power, especially when the markets move against you. And number 3, you've probably heard of mortgage stress testing by the banks, and the reason banks do this is because they want to make sure you can pay them back even if things change for the worse. Now, you shouldn't just rely on the banks to do this, so it's a good idea for you to do some of your own stress testing just to make sure your investments are okay under extreme cases. For example, how would your property do if vacancies increase? Typically, vacancies in Toronto are at around 1%, but with the pandemic, which is a good example of an extreme case, we're seeing higher vacancies at 1.8%. So instead of just using a 1% vacancy rate for your calculations, try to bump up that number to see how that would affect your cash flows. Another thing you can test out is to see how much your rents can drop before you turn cash flow negative. And finally, you can even test out how much interest rates can go up before leveraging falls apart. One easy way to stress test your property is to use our online calculator, where you can test out different scenarios by changing up your variables like your vacancy rate, your rents, and your interest rates. For example, for this investment property in our calculator, we're looking at a $1,000 cash flow positive position at the end of each month based on a 1% vacancy rate. Now this cash flow number becomes negative when vacancies increase to 25%, which is 3 months. So from the stress test, you can see that this investment property is pretty secure. If you want to check out this free investment property calculator that we have, you can head over there by going to the link in our description below. A key takeaway is that not all investment properties are the same. When properties have stronger cash flows, you're more likely to weather a storm. Our team focuses on freehold income properties in Toronto, so we know which ones make the best investments. And I also wanted to add that we don't just help you buy the property, we're here throughout your entire real estate investing journey to support you, especially when the environment changes. I'll put a link in the description below so you know where to find us in case you need help buying an investment property in Toronto. And finally, don't forget to like this video, share it, and subscribe to our channel. It really encourages us to make more weekly videos just like this one. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video.